16th edition of Back Roads of Illinois with Cesar Delgado. We were Central Illinois Agriculture Source, and in the Midwest alongside in Central Illinois Agriculture. We were glad you're here with us. I talked with Brian Basing from Advanced Trading and Chip Nellinger from Blue Reef Agri Marketing. Brian says that being in the beans cry out is lower from Brazil because their weather in Brazil and Argentina with their pest problem. You can listen on yesterday's podcast with Brian and Chip. We were going to have heavy rain again for this week in central Illinois near Bloomington. Yes, it sounded really rain-soaked in Midwest alongside in central Illinois. Otherwise, our guest today is Jim Iuorio from CME Group. We were talking about McDonald's went risen down for their own hamburgers, and demand are lower than previously years since 2018. According to McDonald's, this is pretty crazy from McDonald's. Okay, this is your agricultural news and markets update on Back Roads of Illinois. The United States and Canada, Mexico joining a letter to stop receiving beef from Brazil and Uruguay because of mouth and feet disease from these countries. Canadian Railroads is not going to work for next couple of weeks because they are dealing with potentially have a strike with their workers. The transportation mentor Pablo Rodriguez said that we were hoping for a good faith in the TM master, but supply chain will be impact on Canada's economy. We were going to talk about the farm bill for next week because lawmakers might be worked out for next week. This is your commodity markets update. Corn futures finished and down 8 to 9 cents. Soybean futures finished and down 8 to 10 cents. Wheat futures finished and down 7 to 9 cents. Now that we were going to talk about the livestock market for today on this morning. Cattle futures finished and up 2 to 4 cents. Higher feeder cattle finished and up 2 to 3 cents per weight. Lean hogs finished and up 2 to 3 cents higher. We were back with our guest with Jim Iuorio. Stay tuned on Back Roads of Illinois. I'm joining with Jim Iuorio from Chicago. He is from CME Group. I am glad to join with him.
I'm so glad to be here.
Welcome to the show. How are you, Jim?
I'm doing great. I'm so glad you asked me. I feel honored to be on with you. I've heard good things about your show. Thank you so much.
Let's start with our conversation about CPI numbers from the Federal Reserve. Could you explain to our listeners about this issue?
Okay, so this is a great question. Now, the CPI number, which is the Consumer Price Index, came out yesterday, May, I think it's 15th. And the PPI number, which is Producer Price Index, which is slightly different, and I'll explain, came out the day before on Tuesday, the 14th. Now, the issue is this, is that we all know that we are in a period of high inflation. Prices are probably, before we started recording, you and I were talking about input costs in my restaurant. Our costs at the restaurant are probably up 40% over 2.5 years. Now, we are at a point now where we want to believe that inflation is going away. But unfortunately, over the last year, it hasn't seemed too much like that's the case. Now, the Federal Reserve has raised interest rates high over the last 2.5 years. They want to lower them back down to avoid a recession, but they can't lower them back down until they're convinced that inflation's gone away. Now that brings us to this week. So the PPI number came out on Tuesday, and the numbers that came out were much, much higher than expected, suggesting that inflation was coming back. So for about 20 seconds, the market was in a panic, thinking that we're coming back to a period of high inflation. Then what happened was they release what's called revisions to data from the past. So last month's revisions were much, much lower, which made this month's numbers look better than they originally looked. Then CPI came out, which is more important, on Wednesday, and that came in slightly lower than expected. So that's why the stock market rallied, because the stock market rallied and went higher because they believe that the Federal Reserve is going to cut interest rates sometimes within the next few months, and lower interest rates are better for assets. Does that make sense, Cesar?
Dang, with plus the city's taxes and fees in the city of Chicago.
You are preaching, Cesar, no doubt about it. Like, it almost seems when you have a restaurant like I do in county, it almost seems like the government is intentionally trying to put you out of business. I don't know why that would be the case, but every time there's
The economy is going to be in recession.
I think there is no doubt in my mind that the economy is going to be in recession relatively soon. As a matter of fact, I think the recession has already come for the lower half, probably the lower 70% economically in our country right now. And you can see that in things like credit card delinquencies going higher, delinquencies on all loans going higher. Just in the small business world, 52% of independently owned restaurants are currently late on their mortgage payments. 45% of all small businesses are currently late on their mortgage payments or on their whatever payments, their loan payments. These are historically high numbers. I think what we've seen over the last 4 years was this huge wealth transfer from the middle to the upper end. I think the top 30%, the asset holders in this country, have done extremely well. Housing has gone through the roof because of a chronic undersupply. Stock market is at all-time highs because of the liquidity that's been injected into the system. But only 40% of people own stocks, and probably, I think, even less than that actually own homes. So the rest of the world, and Walmart just posted earnings, I believe it was yesterday afternoon. Walmart had great earnings. Guess why? The reason they had great earnings is because some of the higher end shoppers are now shopping more at Walmart out of necessity. So in my mind, there is no question that the recession is here for most people and that it will come for the rest. The job market too, let me just finish with that too, is that those BLS numbers, the Bureau of Labor Statistics numbers that have come out over the last year and a half are absolute nonsense. They're making it seem like we have this great job market where the reality is government jobs, healthcare jobs, education jobs, all three non-productive, and then second and third jobs. So to me, there is no question, like I said, that we are heading in the wrong direction.
Honestly, I don't feel it went in 2008, but the geopolitics is pretty high.
So that's the one wild card. And I think that's very difficult part to interpret as someone who's a macroeconomic analyst, because things could get better or they could get worse in the Middle East with the conflict between Hamas and Palestine. I mean, Hamas and Israel, or really with Russia and Ukraine. So you are forced then to make assumptions. And the only assumption you can make is that it stays at this level of containment. And I hate to call it containment because, real people are losing their lives and my heart goes out to them. But I'm, on the other side of the world here, we're trying to figure out how markets respond. And I think the oil market is what you really want to watch when geopolitical things are happening, particularly in the Middle East. And by the way, the oil thing too, that we're recording today on Thursday at 11:30. Oil is starting to move above, this is WTI, above that $80 level. I believe if it settles the week above 80 and then it trades next week above 80, I think oil could be heading higher quickly.
Yes, it does seem like an interesting for right now.
Yes.
What's going on about the spending bill in Washington, D.C.? There is another one in the horizon.
So let's talk about the spending bills as a whole first. beginning with the Inflation Reduction Act, which is the most ridiculously named bill ever, because it was an inflationary spending bill. Here's the situation. Our federal government is accumulating $1 trillion of additional debt every 100 days. Our government has to, in my opinion, has to run at a deficit, has to run debt because they have to issue bonds, because our bonds circle the world, and that's where people keep their money. That's fine. But to be spending money and accumulating debt in a time period where they keep claiming it's a good economic condition, well, then why in the hell are you spending money like drunken sailors, which is what they are? By my estimation, the extra money being spent and the extra M2 money being injected into the system through government deficit spending, there's probably an extra $2.5 trillion above trend from the ridiculously high trend that began in 2009 and culminated in 2020. So this is something that is such a head scratcher. They keep telling us that the economy's I wasn't even aware of that, but I'm certain that it is, because there's always another spending bill up on the horizon. And I don't know, even today, Jamie Dimon came in and said, we are on an unsustainable path fiscally. 2 days ago, Jay Powell, chairman of the Federal Reserve, said we are on an unsustainable path. The IMF, International Monetary Fund, came up and said we're on an unsustainable path. I don't know. Maybe it's Cesar and Jim have to scream to them, hey, guys, you're spending too much money and you're on an unsustainable path.
I agree with you, especially the economy is lagging.
I don't think there's any question about that. I think I had thought for the last 6 months that what was going to happen is a problem was going to show up in commercial real estate, regional banks. Now I think it's going to be the labor market. I think the labor market is already starting to soften. I have a lot of connections to call it the 25 to 32-year-old range because of two of my daughters. 2 years ago, their friends were getting big offers by different companies. Now they can barely find jobs. I have a niece and a nephew coming out of college. Neither of them have found jobs, nor have their friends. And these people are coming out of relatively good universities with solid degrees like engineering and computer science.
Yes. Same thing with my family and friends.
Yep, it's crazy. And here's something to think about too. Like, when you think about the labor market and young people, it seems like the progression is if you come from an elite or an almost elite university, your first jobs out of school are with the big companies, right? You go to work in Chicago here, you go to work for Aon or Ernst & Young or Deloitte. And then down the road, you go with your friends who are starting smaller companies or mid-sized companies that you have consulted with or learned, and you find your niche. The problem is those big companies have stopped hiring. The mid-sized companies are still hiring. That's probably because there was such a labor shortage for so long that they don't want to shed jobs yet. So that could be the next shoe to drop, but it's already begun with the big companies.
I work from home because of my disability.
Do you like working from home?
But people are not so good to take advantage of that from work home.
Oh, I get what you're saying. I went down another road there. I'm sorry, Cesar. Yes, certain people, I think when you work from home, there is a great incentive to just do the bare minimum and not try to impress people as much as take advantage of the system. I agree with you on that, Cesar.
Jim, what are the oil markets for today's world events? I know that you are not an oil trader. However, could you tell our audience?
Absolutely. And by the way, I do trade oil. I just don't trade it as much as like someone like Bobby Iacchino, my partner, who I know was on your show before. Here's what I think is that everybody is telling us that we're at record production in this country, which we are, and that's wonderful. Record production today is a reflection of policies that have been set forth 5 to 7 years ago, because it takes a long time for these wells to come online. What I'm really, really concerned about is that we are not putting in the investment right now in research and development and not opening new wells. And we are going to have to pay the price of that. Oil is not going away. This administration ran on getting rid of fossil fuels, right? They, in the same week, 2 years ago, they debated a bill in Congress about denying access to capital markets from oil companies. And then they called those same oil companies and asked why they weren't pumping more oil. This is like, that's psychotic behavior, in my opinion, and yet they did it. So I am very, very concerned about oil. Over the next 2 years, I'm going to be shifting a lot of the money I have invested in tech into materials like oil. I already have copper, silver, gold, because I think there's two things going on here. One, I think in the oil market specifically, we are not putting enough into it, and that is going to bite us in the next couple of years. And I also think that we are devaluing the dollar through the spending bills we talked about before and through the excessive government debt. And I think things like oil are going to be a good trade over the next 2 years. Very good trade.
Do you have any final thoughts about these issues?
I do. I think we're in a difficult spot. Like you talked before, you asked questions about the Federal Reserve and government spending. I think in June of 2021, when inflation started to accelerate and the Federal Reserve had a kind of a chance to head it off if they would have acted quickly, and they didn't. So now I think they've painted themselves into a corner. I am worried a little bit about stagflation, which is a slowing economy opposed against inflation that is still sticky. Now think about the inflation. We've negotiated new contracts for Social Security, new contracts for unions. Wages are going higher, which, by the way, they should. If you're getting that, if you're living in a high inflation world, you want to have more money to accompany that. However, then you get caught in this wage price spiral. So I think inflation is going to be sticky above 3%, probably for the next couple of years. But I do think that certain assets could do pretty well in that case. And that's why I'm looking at gold, copper, silver, Bitcoin. I don't really know what Bitcoin is. Yeah, right.
Thanks, Jim.
Thank you, Cesar. I love what you do. I love your show. I think you do a great job, and I'm very honored that you had me on as a guest. Thank you, sir.
This is Jim Iuorio from Chicago and Comedy Group. We were back with our last segment on Back Roads of Illinois. Thanks, Jim Iuorio, to be on the show. Well, folks, there's our show for today on Back Roads of Illinois. We were glad you're here on the show. For Back Roads of Illinois, I am Cesar Delgado. Have a great day.